Schwab is selling $2.5 billion in long-term debt to raise funds for general corporate purposes. This means that Schwab is borrowing money from investors who buy its bonds and promises to pay them back with interest over a specified period of time. Schwab can use the money it raises from selling bonds for various reasons, such as investing in its business, refinancing existing debt, or paying dividends to shareholders. Why is Schwab doing this? One possible reason is that Schwab wants to take advantage of the low interest rate environment and lock in a favorable borrowing cost for the long term. By issuing long-term debt, Schwab can reduce its exposure to interest rate fluctuations and secure a stable source of funding for its operations. Another possible reason is that Schwab wants to diversify its sources of funding and reduce its reliance on short-term borrowing, such as margin loans or pledged asset lines. By issuing long-term debt, Schwab can improve its liquidity and financial flexibility and enhance its credit profile. What are the risks and benefits of buying Schwab's long-term debt? As an investor, you need to weigh the potential return and risk of investing in Schwab's bonds. On the one hand, you can earn a steady income stream from the interest payments that Schwab makes on its bonds. You can also benefit from Schwab's strong reputation and financial performance as one of the leading brokerage firms in the U.S. On the other hand, you also face the risk of losing money if Schwab defaults on its debt obligations or if the market value of its bonds declines due to changes in interest rates, credit ratings, or market conditions. Therefore, before you decide to invest in Schwab's long-term debt, you should do your own research and analysis and consult your financial advisor. You should also read the prospectus and other relevant documents that Schwab provides to understand the terms and conditions of its bonds and the risks involved. Schwab's debt issuance is a sign of resilience in the face of regulatory scrutiny and market volatility. Charles Schwab is one of the largest and most trusted financial services firms in the U.S., with over 32 million active brokerage accounts and over $7.5 trillion in client assets. The company offers a wide range of products and services, including online trading, wealth management, banking, retirement planning, and more. But Schwab is not immune to the challenges and uncertainties that affect the financial industry. In recent years, Schwab has faced increased competition from other online brokers, such as Robinhood and Fidelity, who offer commission-free trading and attractive features for investors. Schwab has also faced regulatory pressure from the Securities and Exchange Commission, SEC, which has launched an investigation into its robo-advisory platform, Intelligent Portfolios, over potential conflicts of interest and disclosure issues. And Schwab has had to navigate the market volatility caused by the COVID-19 pandemic, the inflation fears, and the interest rate environment. Despite these headwinds, Schwab has shown remarkable resilience and strength in its financial performance and growth strategy. One of the indicators of Schwab's confidence and stability is its debt issuance activity. In 2022, Schwab issued over $21 billion of debt securities, including senior unsecured bonds and commercial paper. This was a significant increase from the previous year, when Schwab issued only $8 billion of debt. Why did Schwab issue so much debt in 2022? And what does it mean for investors? One of the main reasons Schwab issued debt was to finance its acquisition of TD Ameritrade, which was completed in October 2020. The deal was valued at $22 billion and created a combined entity with over 28 million brokerage accounts and over $6 trillion in client assets. The acquisition was expected to generate significant synergies and cost savings for Schwab, as well as expand its market share and product offerings. Another reason Schwab issued debt was to take advantage of the favorable market conditions and low interest rates. By issuing debt at low costs, Schwab was able to strengthen its balance sheet and liquidity position, as well as diversify its funding sources and maturity profile. Schwab also used some of the proceeds from its debt issuance to repay some of its existing debt obligations and reduce its interest expenses. Schwab's debt issuance also reflected its credit quality and reputation in the market.